You've seen the green candles today and felt that tiny spark of hope, but your gut is telling you it's a trap, isn't it? Watching Bitcoin bounce to $69,000 feels like getting a text from an ex. It looks inviting, but you know deep down it usually ends in a block. If you mistake this dead cat bounce for a moon mission, the cost isn't just a missed entry. It's watching your portfolio evaporate while the pros exit their positions. I'm going to show you 3 specific technical indicators that prove the bears haven't left the building. They've just gone to the kitchen for a snack. By the end of this video, you'll know exactly why $55,000 is still on the table and how to tell if a trend is actually reversing or just faking you out. We're diving deep into the data that the permabulls are choosing to ignore today so you can stay ahead of the next major flush. What's up? I'm Stocks and welcome to Stock Sprint. New here? One quick tap on the subscribe button will keep you in the loop. Get your friends to join the Sprint crew by sharing the video. All right, let's get to it. Bitcoin's recent move from the $60,000 lows up to $69,000 has everyone talking, but the atmosphere remains heavy with dread. The crypto market is still in full panic mode, and the numbers don't lie. Currently, the Crypto Fear and Greed Index sits at a staggering 8 points. That is extreme fear territory, just a hair above the all-time low of 5 we saw back on February 6th. It's a level of market anxiety so high you'd think the blockchain itself was about to be repossessed. Even with a sea of red dominating the charts, there's some hopium for the Deegans out there to breathe. The global crypto market cap actually ticked up 4.3% today, reaching $2.36 trillion. However, you have to keep things in perspective. That's a very modest bounce when you consider that around $2 trillion have been wiped out in recent weeks. Does this feel like a recovery to you, or just a brief pause before the next drop? Drop a comment below and let me know if you're buying this dip or waiting for the real floor. Over on Myriad, which is a prediction market developed by Dostan, the traders aren't exactly popping champagne yet. Traders there are currently pricing in 68% odds that Bitcoin dumps toward $55,000 before we see any recovery toward $84,000. That's a significant amount of pessimism, especially considering $55,000 sits right around the 200-week moving average. Historically, that 200-week average has been the floor that stops major bear markets in their tracks. Even the big banks are starting to sweat. British multinational bank Standard Chartered has adjusted its forecast, and not in the direction bulls want it. They've made a measured adjustment, cutting their end 2026 price target from $150,000 down to $100,000. This is actually the second reduction they've made in under 3 months, reflecting some serious institutional caution. They're warning that while $100,000 is the goal, the coin could easily crash to the $50,000 zone first. It's like a bank telling you that you'll eventually get a raise, but first, they're going to take your desk and your favorite stapler. Now, let's get into the nitty-gritty of why the daily charts are screaming caution. We start with the Average Directional Index, or ADX, which is currently sitting at 51.3. For those who don't know, ADX measures trend strength regardless of which way the price is going. Anything above 25 confirms a trending market, and anything above 50 means there is serious conviction behind that trend. With an ADX of 51.3, we are looking at a very strong bearish trend. Sure, this recent bounce might lower that ADX number slightly, but it doesn't mean Bitcoin has magically turned bullish overnight. It just means you can't be a permabear forever. You have to expect these FUD or FOMO episodes inside of solid trends. Next up is the Relative Strength Index, or RSI. It's currently at 35.0, which is firmly in bearish territory. Momentum is measured on a scale of 0 to 100, where below 30 is oversold and above 70 is overbought. At 35, Bitcoin has bounced off the $60,000 lows, but is still nowhere near the neutral 50 level. Most seasoned traders wait for that RSI to break above 50 before they even think about calling a momentum shift. Right now, an RSI divergence is divorcing price faster than a billionaire leaving a reality show. To top it off, we have the 50-day exponential moving average, EMA, trading well below the 200-day EMA. This is a classic bearish setup, showing that recent price action is significantly weaker than the broader trend. It creates a heavy bearish structure that's hard to break without a massive influx of capital. Speaking of capital, the Bitcoin ETF narrative has taken a dark turn recently. Yesterday alone, ETF outflows shed $410 million. It shows that even the most bullish institutional players can panic when their charts start bleeding red. This isn't just a one-day fluke either. We saw a cascading series of withdrawals throughout February. It started with $272 million leaving on February 3rd. But the real gut punch was the $818 million exodus on January 29th. That massive outflow shattered a multi-month inflow streak and initially pushed Bitcoin below the crucial $84,000 support level. Interestingly, not all crypto assets were being dumped. While Bitcoin ETFs were hemorrhaging capital, Ethereum and XRP funds were quietly attracting inflows. It suggests that sophisticated investors are strategically reallocating their money rather than exiting the crypto space entirely. Does this make you look at ETH or XRP differently while Bitcoin struggles? Tell me in the comments if you're moving your bags into altcoins right now. Today's CPI data release could be the final judge for this $69,000 bounce. Analysts are expecting inflation to come in at 2.5% year over year. If the print comes in hot, meaning higher than expected, expect to see Bitcoin head straight back towards $60,000. A cool print might finally give the bulls some much-needed breathing room. It's a lot of pressure on one data point, but that's the macroeconomic world we live in. Bitcoin did rally from $68,248 to an intraday high of $69,450 before settling around $69,321, a 3.69% gain in 24 hours. It's not bad on the surface, but the bigger picture suggests you should keep your champagne on ice for a bit longer. Celebrating this bounce is like cheering because your sinking ship just found a slightly smaller hole. If you're a day trader, though, the 4-hour chart offers a slightly different story. Conditions there are a bit better for quick leverage plays or scalping. The 4-hour ADX is at a weak 20.6, which means there is no clear trend. This is actually good for traders who like to play the bounces between established supports and resistances. The RSI on the 4-hour is neutral at 53.6, and the squeeze momentum indicator is on. This suggests price compression before a move, but remember, the daily trend is still the boss. Any 4-hour rally is likely to hit resistance very hard because the daily momentum is so bearish. Day traders might be able to scalp a move to the $70,000 or $72,000 range. But if you are a swing trader or a long-term holder, the wise move is likely to remain cautious. For the Bitcoin bulls to truly take control, they need a February 6 style candlestick, but even bigger. Another option would be a series of green daily closes that push the price above $80,000. That would be the signal that the bulls are actually back in the driver's seat. Until that happens, this $69,000 bounce is likely just noise inside a larger downtrend. The market structure right now is complex, and institutional flows don't always align with what we see on retail sentiment indicators. It's a game of patience and data over emotions. That's today's sprint done. Thank you everyone for watching. If you got value from this video, please feel free to subscribe and share the video with a loved one who may need it. I'm Stocks, and we'll see you on the next stock sprint. Have a nice day. Wow, you're still here. You must love the channel. Take a look at this video I think you would like, or you can just watch the latest upload.